Good evening everyone, and welcome back to another live stream, another day of chaos in the crypto market. And of course Bitcoin is dumping, as the graphic kind of says. Everybody's in meltdown mode. We are seeing a lot of red across the market, but more importantly the sentiment is absolutely in the gutter right now. People calling for a bear market, people calling for recession, just all the usual calls. And tonight we are going to go through a few different charts. We're going to obviously look at gold, which is stealing most of the headlines. And we're going to look across the markets. We're probably not going to get into too many altcoin requests looking at specific alts. We're going to try and do bigger picture. We're going to look at Bitcoin. We'll look at a couple of alts. We'll look at the market caps. We'll look at gold. And we'll maybe talk macro. And basically what I want to do today is try and show why there is not a single percent in my head that we are in a bear market or even close to it. And I'll show why, and I'll show why I think we are about to see a massive expansion in the monetary supply. We'll cover kind of some historical stuff just to try and give some context to it. But rather than go through some altcoin charts and basically say we're at the bottom and it's a good time to buy, which pretty much every altcoin is, I thought it was more valuable to do that. So yeah, drop a like on the stream. We'll get to the chat shortly. We'll take some breaks in between me ranting, and yeah, let's see if we can bring some positivity to the markets. To be fair, Kieran asked a question, so before I go on, a lot of this is because we are seeing a lot of big figures in crypto painting the bear case. I don't see a lot of people talking big picture bull, so I'm going to do that tonight. Alright, so let's look at Bitcoin on the daily chart to start off. So Bitcoin fell through this kind of support level, if you want to call it that, earlier today. We are just touching the 200-day moving average at a key line in the sand, and I'll show why this is a key line. So if we go to the monthly, we can see this blue line actually ties up with the bottom wick from September and August. So it's quite a key price level, this blue line at the bottom. At the same time, it's the 200-day moving average, which we always talk about. It's a key indicator. Above it, you should be bullish. And it acts as a massive support. And I'm going to show you a time when it was a key support. And if you buy around the 200-day moving average, typically you do pretty well in Bitcoin. So Bitcoin's retraced to there. It's pretty much wicked exactly off it today. But on top of that, what we've also done is we've now retraced 50% of the big wick from Friday. So if we just use a fib, because it measures it pretty much exactly, you can see the 50% retracement level is also there. So when we do get these big cascading liquidations, the 50% level is typically what we fill afterwards. Now, not always. I've shown loads of examples over the last 2 weeks where we've not filled any of the wick. But when we do fill it, it's typically a 50% move, and we've slap bang nailed that earlier today at the 200 MA at the monthly wick low for September and August. These things don't happen by accident. Like, these price moves aren't a fluke. Smart money knows exactly what they're doing. It's funny because earlier today I saw that the chart is kind of painting a bit of a head and shoulders pattern, something like this, with that orange line being the neckline. I actually texted one of my mates today saying once we start hearing head and shoulders pattern, then we know it's going to be bullish and we're going to flip to the upside, because these patterns are too obvious. And just before I came on stream, I saw, let me try and find it, I'm not sure if I've got it actually, but Peter Schiff basically shouting that head and shoulders pattern on Bitcoin targets something like 74k or something like that. Whatever, nonsense. If you've been on our streams for a while, you'll know that we had the exact same thing on XRP a while ago. So we had a bit messier. It was on the 3-day time frame. Let me just go back to, I think it was about here. Yeah, it was probably here. So back here, everybody was saying the same. So everybody was saying that we were painting head and shoulders. So here, something like that. And then we got the deviation below the trend line. For me, this is exactly what's happening with Bitcoin. And if we forward it on, what we can see is XRP deviated below the neckline and then obviously went much higher and put on a new all-time high. So for me, I'm not concerned about the head and shoulders pattern. I think it's just noise. And I think, to be honest, the 200-day MA, the confluence of the blue line, means that I kind of don't have too many fears of this playing out. So Bitcoin for me, 50% retracement of the wick, that could be a key sign for reversal, which would be really nice. And yeah, like, we're seeing a sell-off, don't get me wrong. Like, I'm not on here to say everything's rosy and everybody should be bullish. All I'm doing is showing why I remain fully bullish, fully in the market, and I think we're going much higher very soon. Now, for anyone that's been paying attention to the news today, the regional banks in the US are having a horrific day. So this is the ETF that follows all the regional banks. So the regional banks basically took on too much risk. The cash in the system, the liquidity we've spoke about over the last few weeks, the reverse repo are all drained, and now regional banks are starting to feel a lot of pain. Some of the regional banks dropped as much as like 13-14% today, which is a massive move. And obviously, if you've got money in that bank, the last thing you want to see is the stock decline. But if MD's been in crypto for a while, MD's been following the channel for a while, we had the same thing back in March 2023. The regional bank crisis, 3 banks went bust. The Fed had to step in and bail out a number of banks in the US, all kind of community regional banks. And it was right here. Right here. March 2023, we had a massive sell-off in crypto. The regional bank crisis happened right in this point here, and we were back at the 200-day moving average. for me, things like that don't happen by coincidence. Smart money moves the market where they want it to go at the right time. And for me, this just seems too big a coincidence that the last regional bank crisis happened right in here. And all that happened, the Fed stepped in, bailed them out, like always happens with banks, and away we go, much, much higher. So there is a lot of confluence on the charts that say that we are going through a bit of a rough period, but it's almost over. And, you know, there's a saying in charting and markets that history doesn't repeat, but it does rhyme. It feels like there's a lot of things starting to rhyme. And to be honest, the regional bank crisis, the 200-day moving average, the sell-off, there's just too much happening that tells me that we're going to rip higher very, very soon. So that's kind of one thing I wanted to show. If we go down, let's have a look down here. So down on the right hand side, I hope you can see on the stream, but basically this is the yield of all government bonds in the States. So you can see we are massively red today. The 2-year yield is down at 3.4%. The 10 years below 4% for the first time since April, but really the first time since October 2024. Remember, that was just before or just after the Fed had cut the rates 50 basis points. So when Trump came into power, he said he needed the 10-year yield lower because borrowing costs for the states were becoming the biggest item on their balance sheet. So the biggest single thing the government pays for in the states is interest on the debt. And that's because yields were too high. Well, yields aren't as high now as they were when he took office. In fact, they're down 17%. This is going to make borrowing a lot cheaper, but the most important one is the 2-year. So the 2-year is now down at 3.4%. And basically what's happened today, because of the regional banks, because of the fear in the markets, investors have bought government bonds. And the reason they've bought government bonds is as a safety, to play safe, to get out of riskier assets. But what all that does is that opens the taps for government money printing. So for me, this is a really bullish move. The other thing that the 2-year yield does is it front runs the Fed. So the 2-year yield basically tells the Fed where they need to be. And the spread between the Fed's interest rate and the 2-year can never be too wide. So basically the 2 years telling us the Fed needs to catch up quick. They need to cut rates and they need to start cutting rates quickly. And that's why over the last couple of days we have seen the chance of a 50 basis point cut in 2 weeks' time start to rise. So this was 0% yesterday, 0% a week ago. It's now 3%, a small chance. But if things continue to weaken in the banking sector, the yields continue to free fall, plus the shutdown, plus the reverse repo, somebody's going to blow up. A hedge fund, a bank, somebody. In fact, it's up to 5% in the last 2 hours. So these moves don't happen by accident. They're actually massively significant moves, even though it's 2%. And for me, it's all telling the one story. QE, massive liquidity is coming, and that's going to be very bullish for risk assets, bullish for crypto, bullish for Bitcoin, bullish for gold. But in my opinion, gold is front running what is coming. And I'll get to that in a second. Let me jump in the chat and I'll have a look through the chat because I appreciate that this might be a bit of a rant tonight, but that's fine. I think, to be honest, I think it's better than just going through all the charts and trying to paint a picture that way. I think it's better just trying to label why I remain bullish and why I keep telling everybody to ignore the bears. Let's have a look. Conor McGregor, not the Conor McGregor, says, are we in a bear market? No, we're not. Also, on the weekly time frame, we are still in an uptrend. So as long as we don't put in a weekly close below 107.5k, we're still in an uptrend. So we're not in a bear market. Will I be selling any Borg before 250? Probably not, to be honest. But it all depends on timing in the market. If the market starts to show top signals, and Borg is at 250, then yeah, but I just don't believe that's ever going to be the case. I think Borg's going to run way higher than that, and actually we could see Borg get much higher, much quicker than the rest of the market. Let's see. Yeah, Ross, that is basically the point of this stream. To be honest, I think with other people's theory, like, everybody's entitled to their theory. So this is my theory. This is why I stay bullish. This is why I come on stream for the last 3 weeks and say we're in a bull market, ignore the bears, and we're going to go much higher very soon. In CC Pro every single day, I'm showing you the bullish case, but I thought it was good to do it on stream. I was going to do it as a video, but I actually think streams are better for stuff like this. Yeah, Deck done a video on the regional banks, and I think he was in a car. I feel like he was in a car park in Amsterdam, just wandering about the hotel car park, and literally we pumped hard straight after. I think, so I'm going to show you another thing, and Ross brings up a good point. I think a lot of people are becoming fascinated with where we are versus previous cycles in terms of timeline. So normally we have the halving, and then the bull run peaks about 18 months after the halving, and I think everybody's getting tied up on that. I actually have a really good chart which takes a bit of explaining, but I'll show you why this liquidity cycle and this business cycle is different from previous cycles, and why we're not seeing the timing match up. And it's all a game, in my opinion. Let's talk about the Russell. So the Russell broke out yesterday, made a new all-time high. It sold off today. Obviously weighed down by the regional bank crisis. If you think the Russell 2000 is made up of small cap stocks, they all borrow from regional banks. They all borrow from smaller banks. So this will obviously be a bit turbulent for them, but the bullish thing is when the Fed does step in, and the Fed has to step in. The Fed cannot let regional banks and people's deposits and mortgages go under. We know that from history. It's just a fact of life. We're doing it in the UK right now. The Bank of England is actively bailing out pension funds and banks as we speak. We just don't know about it because they won't publicise the details, but it's just a fact. The Fed's going to step in, and when they do and they provide that liquidity, it's small caps that are going to benefit the most, and again the Russell will fly. So I wouldn't be too worried about it. In fact, I've not looked at this before the stream, but let's see what happened with the Russell in 2023. So it's probably here, was it? Let's see. Yeah, here. So the Russell was here and then eventually went on and put in a high. So yeah, I think the Russell's going to break to new all-time highs in the coming weeks, and it'll keep going and it'll rip hard. Let's show this chart and let's see what people think of this. So there's a lot of information on this chart, so hopefully this comes across okay in the stream. Every line, every blue line is a presidential or a president taking office. So you've got Bush, I think Bush again, Obama. No, you've got Bush, Obama, Bush, Obama, Trump, Biden, Trump. So Bush took office in 2001, increased in the first 12 months the money supply 10%. Second time, 4.8%. Obama, first time 2.98%, but he took office just after the massive multi-billion bank bailout of 2008, so money supply was already elevated at that point. Obama's second term, he 6%, he increased the money supply in the first 12 months. Trump, 5%. So you're getting the picture. In the first 12 months, presidents run the economy hot. They print trillions of dollars or billions of dollars in the past, but now trillions, to start easing the pain and really giving the people what they voted for. and they need money for that. So they stimulate the economy, so there's an instant feel-good factor about the economy. If we fast forward, Biden 11%, but COVID, so we'll give him a break. Although money supply went vertical into Trump's last year, and then Biden, obviously we know what happened. Right, this isn't a pro whatever side, by the way. This is just facts. So the last 2 years of Biden's presidency, he shrunk the money supply by almost 5%, which if we go back and we can see it back to 2001, this just did not happen. We've never shrunk the money supply as aggressively as we did. Fast forward to Trump taking office, and in the first 10 months, we have only saw a 2.5% increase in the money supply. Now, I'm not saying that's good or that's bad. I'm just saying that that is half of what normally happens, including Trump's first term, with the money supply. Normally, they open the floodgates and just let the economy rip because they want to come in and start paying for stuff that they think people want. What I believe, and I've said this for a long time, is Trump understands that, but he also understands towards the back end of his presidency, he's going to be limited in what he can do if he front runs all this money printing. In my personal opinion, Trump has front ran all the pain. So he's basically made it chaotic this year. He's brought in tariffs, he had Doge, he's done whatever he's done to manipulate the economy so that he tweets on a Friday night, then he tweets again on a Sunday night. He's absolutely caused chaos. But what he's done is, he's not used that silver bullet of money printing yet. He's also dragged the yields down massively, which is going to make borrowing costs cheaper. He's lined everything up. And what you're seeing with the Argentina bailout and the South Korea bailout is the world needs dollars. But now Trump has the world where they want them. So he's got Argentina rare earth deal, he's got South Korea begging for a trade deal and dollars. He's basically shrunk them or kept the money supply as tight as possible so that there's a massive liquidity drain. And then he's going to absolutely bazooka the economy over the next 18 months in order to get all the Republicans he can re-elected in the midterms next year so that he can fire on through his agenda into the back half of his presidency. Typically the midterms, no matter who the president is, they lose members of Congress in the midterms every single time. Trump's betting against that with this. So we've not seen a full monetary expansion yet, and when that expands, and I think it's going to start probably in 2 weeks, we are going to see a massive explosion of the money supply. We're going to see trillions printed around the world, and we're going to see Bitcoin, crypto, stocks absolutely take off, and it's going to be like nothing we've seen before. And the last point on this, when the US government holds its yields high, which we've done, or the US has done over the last couple of years, other banks around the world can't reduce their rates as much as they want because the value of their currency will drop too much. So it has to be done in lockstep, and they can only go so far away from the US Fed funds rate. So as that comes down, that actually unlocks liquidity globally. So we're going to see a massive move in the coming months, but that's why we are where we are at this stage in the cycle, in my opinion. And that's why everybody's saying, oh, by this stage in the cycle, we should be here. Well, yeah, but by this stage in the cycle, we should have had massive money printing. And unfortunately, we've not got the money printing. So the cycle's delayed, and we've saw a slower cycle. But all it means is all they're doing is saving up that juice for the second half, or the kind of second half of the first half of Trump's term, so that by the time we get to the midterms, we're going to be money printing like nobody's business. Inflation will be running hot. We're going to see something done with housing. Everybody that holds crypto is going to be feeling amazing. They're all going to go to the polls, and they're going to thank Trump for what he did, and they're going to vote Republicans in. And that means in 2027 and 2028, Trump will be able to get as much policy through as he wants before he leaves office, rather than trying to achieve it now and then spend 2 years doing absolute nothing and everybody forgetting that he was this president that he wants to portray himself as. This isn't a pro-Trump stance. This is just facts. Money supply has barely expanded this year versus previous first years of presidents. When that happens, you will see crypto explode, because the money we're talking about now is $10 trillion over the next 18 months. It's not like a couple of billion here, a couple of billion there. We're talking about 10 trillion getting refinanced by next September. That's more than COVID. So that's why we are where we are. That's why we're slower than we should be, and that's why this cycle is going to run longer, but is also delayed in where we are. We're in the late stages of a business cycle, but we're not where we should be at this point, and it's simply intentional. It's not a coincidence. It's done by design. And in my opinion, this move in gold from April the 1st to today, we're up over 100% in gold. I've actually got a funny story about gold, but gold knows this is coming. Gold knows they're about to open the absolute floodgates around the world, not just in the US, and they're going to print trillions of dollars worldwide. China needs money because they're in deflation, and deflation's worse than inflation. The US needs money. Europe needs money. The UK needs money. Everybody globally is suffering from massive mountains of debt. They need massive money printing. In my opinion, the reason gold is pumping so hard is because there's so much money needing printed that central banks are trying to find something to back up the currency, and most people are turning to gold. And we're going to see a big revaluation of currencies, and it's going to be really painful for the average person. So while we don't celebrate it, it's going to be good for crypto. Just on a side note, I was in Dubai in April when gold was trading at $2,000, $2,200, and we were actually in the souks, and my girlfriend was trying to get me to buy gold, and I was like, nah, it's topped. Gold's topped. And we never bought any gold that day. And yeah, it's basically doubled since then. So maybe she had a point, and maybe I am clueless and actually don't have a clue what I'm talking about. But I hope that makes sense in terms of monetary supply, why we are so behind where everybody thinks we should be, and why we're about to play catch up. And if you listen to anyone talk, Scott Bessent, Howard Lutnick, Trump, all they keep talking about is we're going to outgrow the debt. That's what we did in the 40s, 50s and 60s. When we came out of World War II, debt to GDP was 140%. By the 60s, it was only 60% because they just printed loads of money. They unloaded loads of debt onto the public, and GDP growth was like 10, 11%, but inflation was like 10, 11%. But people could suck it up because they had jobs that they were well paying, and the economy was running hot, and every headline was positive. So that's what they're going to do again. It's the exact same playbook, and I'm not saying I agree with it, but it's just a fact. That's going to happen. Right, let me jump out the chat, and then I've got a few news stories that I will share, and hopefully my ranting makes some sense. Let's see what's happening. Right. This is another thing, and I keep addressing this on stream. This whole thing that we won't go back to all-time highs because we're so low. Like, it just literally open a chart and look at previous cycles. You look at the altcoin market. Bear in mind, Bitcoin was already in new highs here. The altcoin market hadn't broke out, and then within, what's that? To there, 300 days. The altcoin market went up 500%. Most altcoins will lag. The amount of money coming in is just going to outstrip anything. I remember in 2021, Ethereum, people were claiming Ethereum down here. Ethereum was going to try and get back to the all-time high, but it was going to be tough. There was more coins, blah, blah, blah. Ethereum outstripped it massively, and that was with an influx of huge amounts of new coins. The problem I think that's hard to understand is the amount of inflation and the amount of money supply that continues to be printed every single day. It's so much more. It's like exponentially more than 5 years ago, and it's exponentially more than 2017. That it's just going to fire all these altcoins. And if you ever are feeling bearish, I think you just have to look at what people are doing, and it's that age-old phrase of don't watch what they say, watch what they do. And every day you've got massive institutions trying to buy crypto, trying to enable people to buy crypto. These things don't happen at tops because they need that retail investment to come in to create the top. So what I would say is, if we look through, let me look through some of the news. Let me quickly. 50 basis point. I think there's a good chance we get a 50 basis point cut. I wouldn't short gold. I do think it's going to top soon, but I think it'll be temporary. I think it'll drop, range, and then it'll be, in 10 years' time, gold will be $15,000 an ounce. Unless there's a massive monetary reset, but it's not going to happen. Well, I think ETFs have probably been delayed because of the shutdown. Silver is very difficult to get your hands on. That's the other thing. You can't buy silver in the UK right now. So, yeah, it's chaos. Rural says 4-year cycles have stood the test of time. We've had 2 cycles. It's not like crypto's got this 100-year history that we can go back and check 4 years, 4 years, 4 years, 4 years. Like, we just can't. It's 2 real cycles. You couldn't really count 2013 because it was only really Bitcoin, and it was still impossible to buy. We didn't have centralized exchanges. It was all P2P. So we've had 2 cycles. So I don't know if we can clamber onto the 4-year cycle too much. Plus, we had an all-time high before the halving. That's never happened before. So this cycle's already out of sync with every other cycle anyway. Midterms November 2026. Yep, I know. If you expect this to go into second half of Trump's first half, I think we top. I think I've said this before. I think maybe like April, May next year might now be the top. I thought we were going to get a big top, a massive correction, and then a second run similar to 2021, but more it just looks like we're going to top maybe April next year, May, something like that. Yeah, refinance silver 10 trillion USDs will massively devalue the dollar, and that's why we're seeing gold's run, because it is already pricing in the massive devaluation of the dollar. Gold runs first, so like gold is literally telling you what's coming to fiat currency, and it's not just the dollar, by the way. So everybody, we talk in dollars just because that's what's crypto and investment stuff. It's going to be worse for every other fiat currency. For all everybody wants to take shots at the dollar, you'd rather have dollars than any other currency, maybe except Swiss francs. So if you hold significant wealth in yen, euro, pound, whatever, it's going to get devalued harder than the dollar. Ask your missus if we're in a bear market, bro. Well, she doesn't spend like we're in a bear market, so I'd assume we're not. Bitcoin has historically never closed below the 50-day twice weekly close and continued. 50 days at 101k. Well, let me put it on. I'm sure I've got it here. I'm sure I did this on the last stream. So on the weekly. Did we do this on the last stream? And it's actually not the SMA, it's the EMA. I'm sure we did this. EMA 50. There we go. So the EMA 50 is up there, but if it's on the weekly, The EMA is at 101,762, and we've not dropped below it yet. Nah, I don't see it happening. I think I just don't see that happening, to be honest. I think filling the gap this morning, the CME gap, was important. I think the fact that we're at such a important price point seems to make sense. I think there will probably be some volatility over the next couple of days, and then Sunday night they'll probably make an announcement about some made up program that doesn't exist just to fire capital into regional banks, especially if the stresses get worse tomorrow. So yeah, that's what I would expect. Let's see. Yeah, they have 2.3 billion in Bitcoin. Silver, I think silver looks like it could go much, much higher. You can't buy silver. There was somebody DM'd me yesterday actually trying to buy 15 kilograms of silver, and like you can't get it. It just doesn't exist. He was DMing me trying to buy it, and I found somewhere, and even they couldn't get it. They were just advertising it, and then when you phone, you can't actually get it. So, yeah. Let's see what. Yeah, to be fair, I don't really want to touch on other people's predictions. Like, everybody's entitled to their own. I'm a massive fan of blockchain backer, so I'm not going to sit here and slag him off. I done a stream last week where I disagreed with what he's looking at. But yeah, I've painted my kind of picture of what's happening. I'll show you some other stories why I'm also bullish. Bitcoin, so this shows you the number of Bitcoin that's held on exchanges. As this number rises, it typically means people are selling. This dropped 13,000 over the last 30 days. People aren't selling crypto. The big flushes we're seeing is mostly leverage being wiped out. But Bitcoin continues to leave exchanges at record paces. Balances continue to drop. Obviously, we had a bit of an uptick, but other than that, it's a downtrend. And the number of Bitcoin on exchanges just keeps dwindling away. This, to me, is the biggest worry for gold. This was a queue outside a bank somewhere. I saw it on Twitter earlier today. These are just normal people. Normally, when normal people are getting suckered in to buy gold, and you're seeing every single person on CNBC talking about buying gold and increasing your exposure to gold, that's very toppy. That feels like we're getting to the top in price. Now, I said gold was going to top last week, and it's not topped. So, one thing to probably learn about gold is it probably is getting close to a top, but that doesn't mean we're going to top before we get to like $4,500 or something like that. I'm pretty sure if I draw the fibs on as well, the actual top is 4.7. Pretty sure I looked at this earlier. 4.8, and that's so that would be the 2011 top to the 2015 top in gold. It's probably a bit tighter than that, to be fair. Yeah, something like that. So the top for gold based on fibs is 4817. So that would probably be top end target for me for gold. And it looks like it could get there. The scary thing about gold that everybody's kind of ignoring just because of the price is how fast we're getting there. We've added, in 2 months, we've added $10 trillion worth of market cap to gold. So when people tell me that they don't think X crypto can go from a $10 million market cap to a $200 million cap, gold's just added $10 trillion in 2 months. Like, that's 5 Bitcoin market caps in 2 months. Like, I think because we talk in trillions and billions, that seems like irrelevant. That is ridiculous. So, yeah, I think that's a signal. And I would watch. Somebody told me they were trying to get into gold the other day. I would watch, because it might not be at top now, but the upside potential is probably limited from here, I would say. But who knows? Yeah, crazy. Yeah, this was just a take on the two-year yield. A lot of people are now calling for R star to be the neutral rate, and that is about 1.5% less than where we are now. A lot of people calling for that. This is what I'm talking about. JP Morgan just throwing out crazy gold price targets. Like, gold could easily go to $5,000 or $10,000. Well, that's about a $30 trillion swing in market cap. So if the head of the biggest bank in the world is going to throw price targets, I'd like them to be a bit more specific than a $30 trillion swing. Stuff like this is just clickbait. And I think he wasn't shouting like this when gold was trading at $1,000, $2,000. But he's now calling it now. This feels toppy to me. But yeah, we'll see. And then I like this one. I thought this was massively bullish and massively bearish on the EU. The European Central Bank says Bitcoin will not be included because the reserves have to be liquid, secure, and they have to be safe. Well, Bitcoin's probably the most liquid asset on the planet right now, which is why at weekends we see so much movement, because when people go to their portfolio on a Friday night after Trump's caused chaos, they have one asset they can sell. It's not stocks, it's not gold, it's not dollars, it's not euros, it's not yen. Crypto is the only market that's liquid 24 hours a day, 365 days. The euro is doomed. The EU is going to fall apart in the next 10 years anyway. So, but yeah, it just shows you how far behind we are. And when people talk about, are we late to crypto? When you've still got the head of the ECB talking like this, when you've got other governments around the world starting to adopt and regulate crypto, you just know how far behind Europe is. So I wouldn't worry too much about it. And that is, yeah, and then more takes on gold going parabolic. So yeah, I think, to be honest, the whole point of tonight's stream was more just to show it's negative right now, it's red, but I shared in CC Pro, so if you're not on, if you're not in CC Pro, you should join. I'll drop the link in the chat. CC Pro is our private members Discord. We cover all this stuff daily. But last night I was going through Discord and I was going through the chat room, and some of the comments were the exact same comments we got back in August 2024. And the biggest difference between, for example, April the 5th or 7th it was, we massively sold off. We had a capitulation event and nobody really cared. People were annoyed, but they kind of expected a pullback, whatever. August was totally different. August was chaos. We were getting angry DMs, the chat room, people were arguing with each other, and the same. I'm seeing the same thing in terms of, even on Twitter, everybody's so snide, everybody's so aggressive, and the reason is this here. So this chop from March 2024 to August is 145 days, and then there's a sell-off at the end of it. Just absolutely destroys sentiment, and I think that's what everybody's frustrated with right now, is this chop from kind of here, you know, July time when we started breaking out. Everybody felt really good about themselves. To the capitulation event, that 88 days of just sideways, false promises, false moves higher, where everybody starts to feel good about it. Oh, we're all getting excited, that's it, we're in a massive bull run, and then back to a reset. It's so tough emotionally that I think that's why we see it at certain times and we don't see it at other times. I think when it's a fast flash crash, everybody can deal with it. In a bear market, it's red and everybody knows it's going to be red for 2 years. But at times when you get this fake move where you think we're onto something, that's us, we're here, we've arrived, and then just to sell off, that's why we see that. But it's very similar, and if you look at August, I've showed it a number of times, but once we get through this, we never trade at those prices again. So I do think it's just a matter of patience right now. And yeah, I think for me, the one guarantee everybody has or can have that I can say with 100% certainty is they're going to print trillions of dollars, because they just have to. And it's the only way out of the debt loop that they've got themselves in. And as soon as that happens, crypto's going to explode. Right now, it's my opinion that they're holding everything back. Everything's being coordinated, timed. Just feels like everything's timed. Even this 200-day moving average, the day the regional banks blow up, we're on the verge of the ETFs, and then the shutdown happens, and no one seems to care that there's a government shutdown, but it delays the ETFs, and they're probably going to get approved right around the time that Powell starts talking about QE and QT ending. It just, everything, we always say, you know, it feels like we're in a simulation. We are in a simulation. Like, they know what they're doing. Smart money controls the markets, and I think we're getting close to the end where they have to let the taps off. And that's the other thing. Do they just revalue the gold, and then they don't even have to issue any new debt? They revalue the US gold. For anyone that's not watched before, the US gold sits at $41 an ounce. They revalue it, and they've got $1 trillion to spend on whatever they want when they want it without issuing new debt, or they buy some debt off the market. $1 trillion worth of debt out of circulation gives them a bit of a reset, and yeah, that would be a massive game changer. So yeah, loads of options to be fair, but every single one of them results in the dollar dropping and Bitcoin and crypto absolutely going to the moon. One thing that I would talk about is oil. So everybody keeps telling me that inflation's going to run riot. In terms of money printing, inflation will run riot, but no, the average consumer, the average person on the street doesn't care about money printing inflation. They care about price inflation, and they don't always go hand in hand. Oil below $60 a barrel is a real issue for specific countries, and the number one country is Russia. High oil prices mean Russia could keep this war going forever. Low oil prices, they have their revenues are massively hurt by low oil prices, and I think this move in oil is forcing Russia to come to the table to talk about ending the war, and that'll be bullish for markets everywhere. But the biggest thing is, if oil continues to drop or stays here for like a month or 2 months, the impact on consumer prices is going to be amazing for the consumer, and we're not going to see that CPI inflation number skyrocket, and that also gives the Fed a lot of wiggle room with money printing, QE, rate drops, everything like that. So I guess that's the other point of tonight's stream, is just to bring everything together. Is like, this is such a massive jigsaw puzzle. It's not just a case of Trump wants to buy Bitcoin and he's bullish on Bitcoin, so the crypto market should moon. There's so many different things at play this cycle versus previous cycles, but long term I think we're going to be in a very bullish position, and the yields are massive to watch as well. For anyone that isn't in CC Pro, didn't see what we posted this morning, this is what we were talking about. This CME gap was left from last week, 2 weeks ago, was it? We've closed that, we've closed this one, so the CME gaps are now closed. I don't see us going below the 200-day moving average on the CME futures, which sits at 103k. Yeah, to be honest, I did see your question, to be honest, Lewis. I think, to be honest, I don't really want to go too much into specific tokens or projects. I saw Xborg's announcement that they're chasing the AI hype. To me, yeah, I think he'll do well anyway. I think I'm still bullish on Xborg. Obviously, I hold a lot, and obviously, Xborg is associated with Swissborg and blah blah blah. But I think pivoting to AI, just I don't know. I've not digested it, so I need to understand it more, which is why I've not really covered it. But yeah, there was another good question in the stream. In fact, I think I tried to. Where is it? So this was it. We posted this, just a bit of light-hearted banter on CC Pro, just to see where everybody thought we were. We got loads of comments. We got loads of people saying that we're in disbelief. Potentially, we're in anger. We're in depression. But this is quite a. I don't know if it's accurate, but it definitely summarizes market emotions. And I think the one thing that I think catches everybody out is this disbelief to euphoria will come very quickly. And the switch in sentiment seems more extreme this cycle. I don't know if it's just because it's lasted longer and people are so desperate to get out of the market. But in my opinion, we're probably somewhere maybe here, maybe this pullback here. I don't think we're as low as disbelief, especially, well, we're definitely not in disbelief for Bitcoin. Maybe for altcoins, you could say we're in disbelief. But I think this is something to use, and also I quite like some of the statements on it, like we're all going to be rich. I'm a genius. If you ever have feelings like that, you need to, I would sell some crypto. But yeah, we look at this quite a lot. We used to talk about it a lot when we done the courses as well. I think it's a really important and accurate depiction of markets and how quickly emotions can just overrule your profit taking plan. It can overrule everything. But yeah, we wanted to share this just because it always sparks quite a good bit of debate. Yeah, Shiv, I said for ages, I think 2026 will be a selling year, because we'll be at the top. And even what I said earlier about what I believe Trump's trying to do, that still means that we're going to come into some form of top in 2026. So yeah, it will be a selling year for stocks as well. I think this year's been tough from a stock point of view, and I think this year's been really tough on a lot of people because they've possibly wrote off gold and silver, and now they're scrambling, because if you're a hedge fund, if you're an institution, you get paid based on your performance. You only have clients next year if your performance this year was strong. If you underperform gold, a lot of your clients are going to be looking at you and thinking, why didn't I just pay them? Why did I just go buy gold? Why am I paying them 2-3%, whatever they take? So I think a lot of people are going to be scrambling towards the end of the year, which is why I do think we'll get a melt up into Christmas. I think the other thing is, like I said earlier, the government shutdown. Everybody's forgetting that the government literally isn't paying people's wages right now. They're furloughing staff. They've cut financing to loads of programs. The US economy is like, I don't know, 25%. The US government, is 25% of the US economy. If it just stops paying its bills, stops paying people, that has a massive impact on the economy, which is why we're seeing all this stress happen right now. And one side has to give in eventually. So, yeah, it really comes down to, over the next week or so, polling numbers, the regional banks, that'll dictate whether we get a resolution on the shutdown. And as soon as that happens, Q will be sparked up. There'll be money flowing everywhere, and the stress of the system will probably relax a little bit. But yeah, it's crazy. Biggest economy in the world grinding to a halt, and no real solution. I show this chart quite a lot on stream, but this is quite an important chart, and we're at a very key point, and this is the USDT and the USDC, so basically stablecoins, the two biggest market caps, and their dominance over the entire crypto market. We're about to put in the highest daily close of this chart since May. This breaks out higher, and that's going to be tough for altcoins and crypto. If we look at, I was looking at this earlier, but I'm pretty sure we can go higher. I think we might get up as high as 7.33. If we fill this wick, we're going to see a lot of pain in the markets over the next couple of days. So it's one to watch. The exciting thing is, as this moves around, every single day the stablecoin market cap just increases, meaning there's more and more and more dry powder sitting on the sidelines waiting to be deployed into the markets. And again, everybody's just waiting for that catalyst that's going to trigger the return of dollars into crypto. I know a lot of people hold XRP that follow us, follow the streams. XRP having not a great day. It does look, I'm sure it's oversold. I'm sure, yeah. Don't really get too many dailies on this indicator. So on the daily time frame, printing a 4. So we could see a bit of a bounce tomorrow. I think if I'm honest, politicians will be scrambling because of the regional banks. But I saw just before I came on stream, Ripple have acquired another company. So if you remember, a couple of months ago, they acquired a company. They're starting to acquire these big industry players. Now, G-Treasury apparently is basically the rails that corporate treasuries use to move money. I was reading a bit about it earlier. I need to properly understand it. But this just shows you that these things wouldn't be happening if we were about to go into a bear market. Ripple is making massive moves in the finance and kind of the guardrails of the economy, if you want to call it that. I think they're setting up for something big, and I think XRP is going to do very well over the coming 6 months, 12 months. I'll be interested to see when they IPO. I also think the fact that they're slowly going about their business quite quietly, I think it's bullish for XRP, and when they finally kind of turn on the taps, it's going to be massive. I think this company alone is responsible for $120 trillion worth of corporate treasuries. Don't quote me on that, but I'm pretty sure that's what I read. So yeah, huge amounts of capital and another massive acquisition for Ripple, which will be bullish for the market. And then this is another thing I like to look at just to kind of gauge where we're at. You can see more shorts in the market right now. So not by much, to be fair. There's 10.4 billion longs, there's 10.8 billion shorts. I think the funding rate went negative earlier as well, so that's normally a sign of getting close to the bottom. Bitfinex is the only one that's got more longs than shorts. I'm not sure if it's still true, but Bitfinex used to be institutional traders, so normally that was the signal. Once they flipped, that normally led the market. I don't know if that's still the case because it's tiny volumes, but it certainly used to be the case. But yeah, so what's really good about what's happening right now is we are literally building up so many shorts above us, breaking this line earlier, falling below this head and shoulders. People will be short and people will be piling into shorts. I've spoken about it before. BNB was the absolute test case for this theory back here. I show this all the time on stream because it was brilliant. Right in here, fell below this blue line, shorts just piled in, and then BNB aggressively reversed, and we've never been down there before. I'm not saying that's necessarily what's going to happen over the next couple of days, but what I do think is the number of shorts piling up above us is just going to give us loads of liquidity. Once we start moving up, we'll move really fast because we'll see shorts close, which buys back into the market, which means price rises. But then we'll see shorts get liquidated, and then we'll get a short squeeze. We'll get cascading liquidations to the upside, and I think we could move pretty quickly and fill this fair value gap up to 119,000. I wouldn't be surprised if we didn't make that move very quickly. Just need that spark, that influx of capital, that influx of liquidity, and then we likely see a big move to the upside fueled by shorts that have piled in. I don't actually have the total number of shorts for certain prices, but I'll maybe try and share that in CC Pro. But yeah, when the majority are positioned one way, that typically means they're about to get smoked. So yeah, let's see what happens over the next couple of days. Sunday night, probably the key point of the weekend. Did they even let it get to Sunday night before they rescue the regional banks? If tomorrow we see a double-digit sell-off in regional banks, they'll have to announce liquidity measures over the weekend. They won't let it go into Monday. And that's going to be bullish for us all and for risk assets. But that is all for tonight. Thank you very much for tuning in. If you are in CC Pro tomorrow, I'm going to drop a special podcast that's kind of less crypto related, more just economy, macro, AI, just a few points that I get asked all the time or I see people talking about on X. Hopefully that helped. Hopefully that kind of puts why we're so bullish, why we remain bullish, why we haven't fell for this it's a bear market trap. I do think it is a bit of a trap. I think it's designed to lure people in to short in the market, selling their assets, and I would imagine OTC desks are scrambling to accumulate as much crypto at these prices as they can before institutions come knocking for multi-million dollar deals in the coming weeks. We've got 2 weeks till the FOMC. I think it's going to be a massive, massive moment. I think Powell's pretty much hinted at what he's going to do. He's going to end QT, probably going to relax the tightening of the mortgage-backed securities, and he's going to cut interest rates. 25 or 50, I think we could get closer to 50, but we need to see big moves over the coming weeks. Wouldn't be surprised if we don't get liquidity measures over the weekend, and that'll be very bullish for crypto. Times like this, I would just chill out, sit on your hands if you've got dry capital. Like I said at the start, 200-day moving average has always been an amazing place to buy Bitcoin, but I think some altcoins look like they've got huge upside potential. So if you've got dry powder, I would be deploying somewhere else. And gold, hopefully it tops. Once it tops, Bitcoin will catch up, and it'll be one of the most aggressive pumps we've seen in recent years, in my opinion. I'll be back probably Sunday night if we could get on stream. If not, I'll be back on Monday. If you're not in CC Pro, you need to be in CC Pro, and I will see you all very soon. Thanks for tuning in.